Did you know there's a bunch of franchise companies that are actually umbrella brands and they just buy other franchise systems? We've gone through a few of these companies in the past, like Franchise Group Incorporated, that's on a buying spree. And this one in the restaurant sector that I'm going to go through, I don't think I've seen a company that's buying so many different franchise brands, especially in a very tight time frame. Now, this group is called Fat Brands. They are a portfolio company that continues to grow in terms of unit count through acquisitions as well as organically, but the Fat stock performance is quite volatile. And we're going to go through in today's video why the stock is so volatile in 2022. Fat Brands is based in Beverly Hills, California, and Fat represents fresh, authentic, and tasty. As I mentioned, Fat Brands strategically acquires, markets, and develops quick service restaurants around the world. The company currently owns 17 different restaurant concepts. So rounding that out, we'll start with Round Table Pizza, Fatburger, Marble Slab Creamery, Johnny Rockets, Fazoli's, Twin Peak, Great American Cookies, Hot Dog on a Stick, Buffalo's Cafe and Express, Hurricane Grill and Wings, Pretzelmaker, Elevation Burger, Native Grill and Wings, Yalla Mediterranean, Ponderosa, and Bonanza Steakhouses. So that's a mouthful, a lot of brands. Some of them have really tasty products. I've been to Elevation Burger in the past. I've been to Marble Slab Creamery, Johnny Rockets. They have some great concepts in this portfolio. And Fat Brands, if you're looking to franchise, numerous of the franchises are accepting prospective franchisees. If you're looking to invest in Fat Brands, they're traded on the NASDAQ under the stock ticker FAT, FAT. It completed its IPO back in 2017 at $11.67 a share. As of April 28, 2022, it trades at $5.75. The current market cap of Fat Brands is right around $100 million. However, it's extremely volatile with a beta of 2.16, and it pays a good amount in dividends to shareholders with a different dividend yield around 9%. Last year, Fat Brands made a huge purchase of Global Franchise Group. Before that acquisition, Global Franchise Group ran 1,400 franchise and corporate stores in 14 countries. And most of the brands that I listed off in the Fat Brands umbrella came through this acquisition. And in late 2021, they acquired Twin Peaks for $300 million. Andy Weinerhorn, the CEO of Fat Brands, is certainly encountering some issues right now regarding the pending lawsuits and FBI inquiries into the allegations of security and wire fraud, money laundering, and attempted tax evasion. Andy Weinerhorn denied all the charges and looks forward to the growth of the company. There was a recent article in Franchise Times. We'll include a link. Hopefully, Fat Brands moves past their troubles. In 2020, Fat Brands consisted of only 326 franchisees who operated roughly 2 franchise restaurants, and they've significantly increased their number of restaurants up to 2,240. So they've grown 4x in terms of unit count in a very short period. And a big part of that was through their acquisition of Global Franchise Group. Royalty revenue is pretty high. So Fat Brands is collecting, per their latest income statement, $42 million in just royalties. So that's a consistent stream of income the franchisor is getting. And it's just trading right now, the Fat Brands, at a roughly 2 times royalty. Other franchise brands usually trade at a multiple of 5 to 10x royalties. You even have some brands like Wingstop, which is also publicly traded with about $130 million in royalties. It has a $2.5 billion market cap and trades at 19 times royalties. So this is a much larger multiple on the primary source of revenue when compared to even technology companies that are also being hammered right now with the correction in the financial markets. So although expanding internationally and acquiring new restaurant brands, the increasing revenue fails to offset the cost, expenses. They're servicing a lot of debt. They have pretty good amount of debt on the balance sheet to finance all these acquisitions. So I hope they can refinance some of their debt, get their finances in order, and serve their current franchisees and future franchisees and grow the unit level economics of the system. I hope you enjoyed today's review of Fat Brands. If you'd like us to dive into any franchise portfolio companies or specific franchise brands, just shoot me an email at patrick@vettedbiz.com or leave a comment in the comment section. Thanks.